we told you 3 months ago that the RBI was not very happy with teaser home loan rates, and 6 months ago we told you to keep an eye out for real estate prices because they had started moving upwards. Now don't say we didn't warn you, but those factors are about to kick in. And add that to the new service tax you have to pay on an apartment and you'll realize the clock is ticking on your housing deal. Service tax, interest rates, property prices, they're collectively going to eat a massive hole in your pocket if you don't hurry now. So here is why you should step on the gas and close your home loan deal today.
As we are seeing, bank rates are not at all as attractive. What was earlier announced at an 8% doesn't stay there. We have huge open-ended issues on property taxes. There is a kind of, I would not call it a rumor, but there is a strong hint that there is going to be a huge impact on stamp duty increment in the next 3 to 4 months. So all this is certainly going to impact the, I would say, purchase of a residential property.
If you're considering buying a home, here's the first thing you should be concerned about. Property prices that had bottomed out in the beginning of last year have steadily been inching up since then. Prices have scaled between 25 and 35% last year. And due to that pain, experts tell us prices in India's big cities will move at least 15 to 20% in the next year.
See, I would definitely see that we would see a strengthening of about 15 to 20% moving forward, but there shall be some kind of stability towards the end of the year, because what's happening is the legislation currently is only adding additional layers of cost for a purchaser.
That's not where the bad news ends. The next thing you need to be concerned about are interest rates. Teaser home loan rates that offered you loans at 8% are on their way out. While most large banks like ICICI Bank and HDFC have already pulled out their teaser loan campaigns, all eyes are now on market leader SBI, which will make up its mind at the end of the month. So if teaser rates are pulled out, your home loan, which could have started at 8% in the first year, will move to the current floating rate of between 9 and 9.25%.
If they go out, and they look like they will go out end of this month, clearly it would possibly, and let's see what they are replaced by. I mean, what are the floating rates and what they remain, and whether they increase or whether they remain constant. I think clearly there will be an impact on demand, especially if the interest rates rise.
And to add to that, market watchers expect the RBI to increase interest rates further in the next credit policy at the end of April. So your home loan rate might actually go up to 9.75% in 2 months.
Definitely, I think rates are going up. There's an expectation that in the April credit policy, RBI will raise the policy rates, both the repo and the reverse repo rates. And if you see, the call money has already moved up from yesterday. It was averaging 3 to 3.5%. Last 2 days we have seen it at 4.5%. And we expect interest rates to go up.
And while we hate to give you more bad news, the budget this year brought construction under the purview of service tax. Starting the 1st of July, you will have to pay 10% service tax on 30% of the total value of your construction. That means you need to pay your builder an additional 3.34% on the value of your home as service tax.
Customers, if they are buying flats in the booking when construction is just started, then they have to bear 3 to 3.5% service tax, which is not still clear. But if they are buying flat after OC is coming and flat is near completion, then ready possession flats, they will not bear 3 to 3.5%. But that time they have to pay more per square feet because flat is ready possession. That's why.
The caveats are, if it's a ready property, then there is no service tax. If it's an under construction property, then remaining EMIs or remaining money that you pay from July 1 onwards will be subject to this tax.
And if you plan to buy your home in Mumbai, the news gets worse. The state government is strongly considering increasing stamp duty for property in Mumbai from the current 5% to 8.5%. That's an extra 3.5%.
This is Maharashtra specific. Currently we are at 5% in Mumbai, and there is a huge talk about it being increased to an 8%. So every investor, a 3% jump on a deal size is an impact.
So what's the solution? Our experts recommend you try to close and register your home deal as soon as possible.
If you can take a decision and buy a property within the next 20 days, which you can do if you have finalized your property already, do it and do it now. Take the teaser loan if you can.
Now is as good a time as any. If you have the money and if you have identified the property, go ahead with it before July 1st.
This is the time now, because when you're going to see all these increase, they're going to fold and multiply themselves. So it's the right time to buy now, because you're only going to see an upward trend in the residential markets. So it's the right time to enter if you're sure.
Next, if you're looking to buy a home, try and buy one that's ready or at least near completion.
Most developers will obviously deliver on their promises, but still I think since there is no discount available for taking the risk, I don't see why a regular consumer should take the risk. So that's as far as deciding the property is concerned. Try and go for a property that's already ready, even if it may be second sale, or something that's almost ready. Maybe it's going to be ready in the next 2 or 3 months, so that your construction risk is very small.
And if your home is still under construction, make sure you link all the payments that you give your builder to the levels of construction. This will bring down the burden of interest on your housing loan.
I would always advise an investor end user to link their payments with the completion of the project. Please link it to slab wise. Yeah. If you promised 12 installments, ensure that your development is moving side by side vis-a-vis your payment.
And finally, opt for a floating interest rate so you can take advantage of interest rates when they fall in the future.
Rates will move up in the short term, but the longer term view in India is they will go down. So keep a floating interest rate on your mortgage loan, and so that as over a 2-year cycle rates go down, you will get that benefit also.
Make sure you check all of the papers on the property to make sure the titles are clear.
Very critical that you do very strong due diligence, that the title is clear. And the best way to do that is look at if any of the banks is giving a loan on the property. Because the banks would have done their valuation, they would have done their due diligence.
So step on the gas and close your housing deal. But remember, speak to at least 4 banks to find the loan with the lowest interest rate. Make sure your loan has the lowest prepayment charges as well. And check for other charges on your loan when you take it.